Is Ledger giving away the private keys to your Bitcoin? Let's go around the blockchain. Thank you for joining. We're also going to talk a little Celsius. We're going to talk a little Coinbase. Please hit that like button. Let's just go ahead and get right into it. On our guest today, we have Eleanor, coming straight from Fox Business News. You always see her on there, dropping some hot knowledge to the correspondents. Eleanor, how's it going? Are you ready to talk a little Ledger? Do you have your crypto on a Ledger?
I do not, actually. So I feel pretty safe at the moment.
All right, we're feeling good about that. Also, Firoz, I think he has a seed phrase written in one of those books behind him. You're not going to be sharing your seed phrase with Ledger anytime soon, are you?
It's actually split amongst 5 of those books. Which 5? You'll have to find out.
Oh, in what combination? Who knows? Also on today, we have Crypto Factor. I think he just, also maybe it's one of those books. Now, do you actually read those books, Crypto Factor? Oh, you're muted. You're muted. So it's books on audio, I'm guessing.
So one book, one page, I got my whole seed phrase, so it's very easy to find. Just kidding, obviously. Yeah, I read those books and I wrote those books.
Okay, awesome. And then we have Randi Hipper. She's going to have some hot takes about Ledger as well. Randi, are you ready to get right into it?
Oh, yes. I'm so excited. Let's get after it, guys. Smash those likes, too, if you're out there.
Hey, check out that nice hat that Deezy's wearing today. All right, let's talk a little Celsius unlock to start the show. That is right. Celsius, raise your hand or hit that like button if you gave some of your crypto to Celsius. Yes, I know, not my keys, not my crypto. I lost 2 ETH, but they just went down, I would say but July of 22, it went down 600,000 customers are the rough estimates, and about $4.7 billion of crypto just stuck in limbo after that. They began the process, though, to withdraw hundreds of millions of dollars worth of Ethereum. They had it staked on Lido Finance, and they initiated almost 250,000 ETH, folks. No, not 250,000 in ETH. I'm saying 240,000 Ether unlocked, worth 437 million. They still have 188,000 Ether locked up in this contract. That's worth 342 million. And as of right now, estimates, or people are trying to do the math. They're looking at the claims. They're looking at the assets, looking at the liabilities, rough estimates. Maybe customers are going to be able to walk away with about 75% of their initial deposits there. But we're looking at a lot of price action just to start things off. So Crypto Factor, I kind of want to ask you about this huge unlock. We're looking at about $750 million. Do you see that affecting the price of staked Ether, or is this just too big of an entity for that to make much of a movement?
So it might affect it, it might not, but at the end of the day, these Ethereums that were staked, they belong to them. They can do whatever they want with them, and we see unlocks all the time, and everyone keeps on panicking about them, and it turns out to be nothing, or it turns out to have a little volatility, then it goes back up. I'll tell you this, if something like this can really drown or destroy Ethereum or the price or anything like that, then there's nothing there in the first place to be able to be worth that much money. So essentially, we'll see what it's actually worth or what the actual worth is. Now, I'm not worried about it. I think it's going to be not a nothing burger, but I think it's over estimated or over exaggerated in that case.
All right. Well, Eleanor, there's other people, they have some crypto stuck on this earn program. Maybe not everyone's like me, reading all the articles. They just kind of have a glancing knowledge of what's happening right now. For the people who did deposit in the earn program, what would you say to their expectations that, hey, I think I'm going to be made whole again?
I mean, you never know, right? Celsius, they filed for bankruptcy last year. They were one of the first crypto companies we saw to topple before the crypto winter. They could say that, and you don't really know if, they're being serious or not. And I think it, pays to take what these companies say sometimes with a grain of salt. I think you should always do your kind of due diligence and your own research. I know everybody loves to use those two phrases, but the reality is here, they are in a $4.7 billion bankruptcy. And, I think the amount of ETH that they've taken out from the stake was about 400 million, right? You've got to times that by 10 in order to reach the amount of, the amount that they're in the hole, right? The 4.7 billion. So, whether that is going to, affect customers, we just got to kind of, I think, wait and see. Everybody's just got to kind of, just hope and pray, I suppose, would be the well thing to do if you're a customer.
All right. Well, I hope and pray that not too much of my ETH is paying for lawyer fees because, hey, at this point, hey, just give me 75%. I will be happy with that. All right, Firoz, I kind of want to ask you about the state of the market at the time. I'm going to ask you, hop in your DeLorean. Let's see if this baby can go 90. Was 20% yield always unsustainable? And what about that period made us think that, hey, this is never going to end?
Well, look, I mean, when you're in a bull market, the sky's the limit, right? Everyone's absolutely euphoric. We're high on the gains. Everyone's just seeing all those unrealized gains go up, only to not cash in on them. So, sure, if somebody offering 20% at that time, everybody would buy that. Even I'd be lying if I wasn't tempted by Luna's 20% APR that they had, right? But again, I think the issue there is these things are really hard to sustain. In all honesty, if you're being a realist about it, especially in crypto where we've got volatility, competition is equally just as high. Yes, there are periods where you can sustain those yields, but the question that you need to ask yourself is how are those yields actually being derived in the first place? For example, if someone's going to be offering 20% yields, they must be doing some sort of leverage trading somewhere. They must be at least lending out those assets to, risky borrowers at the end of the day. So again, eventually the cards do fall, but I think in future, if I was to see anything, to be honest, in complete transparency, I didn't give into any of those yields at all. I'm just saying. But again, if we see that in the future, I think we all just need to be mindful that, for me, I always see crypto as cyclical, right? You've got your halving that comes in. If you time it well enough, you have a decent year where you can make a good gain and cash out if you're not being too greedy and rinse and repeat the cycle again.
All right. And I'm referring to at the time they were offering 20% yield and just, hey, everybody was, hey, dive into this, jump into this. Yeah, hey, free money raining from the side here. All right. Randy, I kind of want to ask you a question about two different impacts here. What do you think is going to have a larger impact on the market? Looks like they're about a little more than halfway of withdrawing the 750 million in ETH. So what is going to be a bigger impact? Them withdrawing 750 million from staked Ether, or when that finally deposits into customers' accounts and then they're able to sell that?
I think if people get this ETH, even if they get the ETH, because what we saw with another case is that if you were in the earn program, you weren't able to get your money back. But if you were just holding in their wallet, I guess, without in the earn, you were able to get your money back. So that they haven't really clarified on yet. If you really were in the earn program, as far as I'm concerned. So those are questions I have. Okay, so if you were in the earn program, are you getting your money back? If you were just keeping your crypto there, some people were just holding their crypto on Celsius. Are those people going to get their money back first? So I would like to know the order of that. Also, I think if people are going to get any sort of ETH back, if they're getting the cryptocurrency, I don't picture them selling it. Maybe someone will be like, oh, finally, I have some cash. Sure, I'll spend it. But I don't think it's going to have a big impact on the market because right now we're at a point where people know this is an interesting point in the cycle where right now we could sideways trade for a while, or maybe we could see a pop-off happen. We know ETH had a test where it tested to $2,100 Ethereum. Do you think it could do it again? Maybe. If you think that Bitcoin is going up towards its next halving, Ethereum typically follows that. So if you think there's going to be positive price action, which a lot of people do think there is going to be, I don't think you're going to have anything to worry about, especially when people were concerned about the other staked ETH being unstaked onto the market. Oh my gosh, is ETH going to crash? It didn't. Now there's more staked ETH now than ever. So I think a lot of what people are scared of ends up not happening. So don't give in to the fear. I think if people get their money back, they'll just be grateful they have it.
All right, good take there. All right, well, let's talk about Coinbase versus SEC, and then their lawyer team definitely has some hot takes. I'm talking about Paul Grewal. I want to start by sharing this tweet here. This is their legal counsel. There's their head legal counsel of Coinbase. If only this were a parody instead of a transcript. And we're going to walk you. This is from milesjennings.eth. I'll share it when we get a chance. But we don't have my screen. Never mind. I'm not going to share it. I'm just going to read it to you, folks. SEC, come in and register. Coinbase, we'd like to. SEC, you're not allowed. Coinbase, why not? SEC, the rules are clear. Coinbase, It does not make any sense. SEC, the rules are the rules. Coinbase, can they be adapted? SEC, yes, but we don't like your industry. And essentially just kind of pointing to the fact that they are trying to work with the regulators. Regulators are saying no. Let me kind of walk you back through this whole courtroom drama. Coinbase first asked for clarity in July of last year. We're looking at about 10 months ago. After no answer, Coinbase filed a petition essentially forcing the SEC to respond last month. They had 30 days. Well, they waited till the end of the countdown, and then they responded late yesterday by saying Coinbase hasn't proven SEC needs to create crypto-specific rules. Coinbase now has 7 days to respond. SEC, to their credit, also said, hey, 10 minutes is too little time. And to paraphrase Paul Grewal, SEC told the court that rulemaking may take years, and they are in no rush. All right. Well, Eleanor, you've been covering the Ripple case as well. Does it surprise you that Coinbase seems to be going down the Ripple avenue instead of the FTX avenue? Instead of backdoor meetings where they're trying to shake hands, they're taking it to the courts. What do you think of this strategy?
Yeah, I mean, I think it's proven that most people in the crypto community are now behind Ripple. I think in the early days, it was kind of a little known lawsuit, right? I mean, there was the XRP community who were obviously full force behind it, saying, there's a problem here with the way the SEC is operating and the way they're treating us. But now I think that's become sort of mainstream, and Coinbase has seen that, and they say, well, you know what? I feel like the whole crypto industry is kind of feeling, trodden down, right? Everybody sort of feels attacked. So now they see that and they're like, okay, we can get kind of mass interest around this from the entire, space. And I think that, pushing back on the SEC it's probably the thing to do now. I mean, you saw it with, Grayscale, right? You see it with Coinbase, you see it with Ripple. I feel like there's more to come, but I never thought that Coinbase would kind of go after the SEC directly. And the reason I say that is because a few months ago, I was speaking to a source at another top exchange, and, they had talked about potentially suing the SEC for clarity, because this was kind of right after Gary Gensler's whole Midnight Massacre, all those law enforcement actions we saw in the beginning of the year. They said, we really want clarity in the US. And, if we have to sue the SEC to get those answers, we will. And I said, well, that's interesting. I was like, are there any other exchanges that you think would join you? Would it be kind of a coalition of exchanges? And this exchange said, well, we'd like that, but Coinbase is against it. And at the time, they're still a public company. They are, registered with the SEC. They have to answer to shareholders and their investors. Now they're kind of doing the opposite of what I was told they would do and kind of what people expected them to do. They really are pushing back now. So it was surprising to me. I think it's a rallying point for the industry, and I think we'll see more of it as, if Gary Gensler continues to bring these enforcement actions.
All right. Well, you're bringing up some good points. Crypto factor to that effect. Was Coinbase fighting for decentralization on your bingo card for 2023? What are your thoughts overall about them attacking the SEC?
So generally speaking, no, it wasn't on my bingo cards. I wouldn't have ever guessed it. I would think they would try and get friendly with them and so on. But the truth is, just to add on what Eleanor said, it's an extremely good marketing and branding play by Coinbase right now, what they're doing and standing up to the SEC. Because first of all, they're going to be heard in the news. That you just can't buy that. That costs a lot of money. Second of all, they are with the cryptocurrency community in a way. They're getting them behind them. They can win more people. They win more trust. There's just so many benefits. I can just go on with this that outweigh everything else. So I'm not too surprised on a marketing point of view. But no, to answer your question, I did not expect it, and I'm very surprised that Coinbase. And to be quite honest, it's quite genius of a move from them, and it's win-win for them either way. With everything else that Eleanor just said.
All right. Well, Randi, I kind of want to ask you about, a comparison here, because we're trying to move the crypto space forward. I think, that is their intentions here, but that's probably the intentions of the Ripple case as well. So fast forward, you zoom out here, the 30,000 eye view here. What is going to move crypto forward more? Is it going to be Coinbase or is it going to be XRP Labs?
I think it's a different thing for both. I think XRP is really standing up for more of like the innovative side of crypto. I think Coinbase is mostly standing up for themselves, where they're in situations where they're getting sued by the SEC, unregistered securities. It's dealing with a lot of their listings and their everyday business. So I think it's a little bit different, but I think XRP could have more of an impact in the tokenomics side of things, but I think Coinbase could have more of an impact inside of businesses, because I think a lot of people want to be a part of crypto. There's a lot of exchanges outside the US that want to come to the US and operate here because so many people want to get into crypto. But the problem is the regulations are too much. I also, I feel like this is all a little bit of crypto theater, DZ. We had some crypto theater with SBF. He was out here, one of the smartest guys, but then he was having those backdoor deals with Gary Gensler, talking to him. And what they were working on in the past was IEX exchange. This was going to be a federally regulated exchange. Now, because of crypto and us finding out things, SBF is out the window. He's done, which also put out his federal bit license, which was good as well. But what I did come to find out was in November, I believe this news came out, you guys could look it up, that because FTX failed, Gary Gensler and the SEC had to look to somebody new in order to have this new federally regulated crypto exchange, IEX. Who are they talking to now? Coinbase. So for me, I feel like this might be a little bit of crypto theater where, they're pretending to toggle with the SEC. We need some answers. And then the SEC is like, no, we don't want to give answers. To me, this is just wasting a little bit more time until they actually have to make a decision. Because as we know, Europe is giving definitions. The SEC can't even tell us what a digital asset is. This is just wasting time because they have no idea what to do. So that's just my opinion. I think Coinbase could have a big impact on the business side.
All right. Well, I'll tell you who never wastes my time. That's Firoz. Firoz, Coin, of course, that's the ticker for Coinbase. I'm just going to ask you, bullish or bearish on Coin? What are your thoughts of their health as a company? And hey, maybe even the stock price.
Bullish for sure. Obviously ignoring the short-term volatility, which similarly to Ripple, is being caused somewhat by the SEC lawsuit. I think if you look at Coin on paper, strong business model, solid balance sheet, a massive customer base, right? I mean, they're one of the major popular exchanges that everybody goes on to. Their UX, the UI is really easy for, your average crypto person to get in and onboard themselves. So for all of those things, I certainly think it's bullish. And again, if I compare them to, like, say, CZ, who's very vocal and bullish for crypto, Coinbase is also very vocal and bullish for crypto as well. They want certainty, they want clarity in order to kind of move this industry forward. And at the moment, because we don't have that sort of stuff, they're really on our side to a certain extent. Or certainly my belief is, without having this clarity, without having this uncertainty, we're stifling innovation. So for me, Coinbase certainly is heading in the right direction. And again, they're a proper regulated company as well. So there isn't anything that they're really hiding, in my opinion.
Yeah, and Brian Armstrong, hey, we all have the same haircut. So I got to be bullish on Brian for sure.
That too.
Yeah, it's a major selling point for DZ. All right. Well, I'll tell you who needs a major selling point. That is Ledger. Ledger just came out and they are being vilified for their newest offering here. It's an update called Ledger Recover. Everybody's up in arms about this. It allows for seed phrases to be sharded out to 3 different entities and then sent out to cloud-based third-party hosting agents. So think, they have your seed and it's written on a mirror. They shatter the mirror and they send the shards to different companies there. It's an opt-in service. You have to opt in for this and you have to pay for it. I think it's $10 a month. That's what Randy was saying. Now, there's mixed feelings. Many would just say it's all kind of going in one direction. The best one I found, Polygon Labs. This is their chief security officer. Okay, so we're not talking about a small entity. We're talking about Polygon. We're talking about a C-suite. We're talking about their security officer. The problem here is not splitting the key in 3 parts. The problem here is that encrypted parts are sent to 3 corporations and they can reconstruct your keys. Another concern is the functionality of sharing your seed phrase with a computer. So that must be built in some level with the hardware and the software. Some are assuming it's just a matter of time before a bad actor can exploit that. Hey, it's hooked up to Wi-Fi. Hey, better not hook it up at Bitcoin Miami in the next couple of days. All right, well, let's just kind of unpack, what is going on. Crypto Factor. What were your thoughts? Were the results, was the reaction overblown? And follow up, who is this product for? Muted. He's so steamed up right now.
Was I muted? I'm sorry. I'm always muted. You can see the steam coming from my head. So when I first read this title, I was thinking, "Holy crap! Did I miss something?" Then I read the actual thing, and yes, I think it's overblown for a few reasons. Number one, it's an opt-in, and you have to pay for it. And it's mostly for mainstream people that are coming into crypto right now. I think they made a play for the newbies or the new people that are coming into crypto to actually sell them this and the security or maybe some institutional plays. As for somebody hacking the system, I don't think it's much of a concern. There is a concern there, but not as much as governments. Let me explain in 1 second. See, yes, I think it's going to be very hard for a hacker to get in. I think they've looked into this. I mean, we're talking about Ledger right now, okay? And yes, they have got hacked before, and yes, there was data breaches, but I'm pretty sure that they're going to keep this one tight. The issue is, if it's possible to do this, what stops a government entity to come and say, okay, we want this guy's crypto passphrase because he's in jail or he's being detained or whatever. We want access to his funds. We want to check if everything's okay. We want to check if there's some sort of transaction that's not allowed or regarding terrorism or anything else or AML or I don't know what excuse they're going to use and recover the seed phrase. And they're going to have to comply. Otherwise, they're going to shut them down. So, no, I don't think it's a good idea. Not because you're a terrorist, but because you don't want government snooping around in your private property. I think we all can all agree with that. But other than that, I just think it's aimed for newbies. It's a marketing play. They're trying to get more customers. They probably already got as many customers as they can from the cryptocurrency industry. They're trying to get ready for that next bull run and new people coming in.
All right. Well, Eleanor, Factor, you brought up a good point. They essentially just going to want to get more customers here. My question to you is, will the majority of humans on Earth, I mean everybody, not people in crypto, talking about the 6 billion people who have never interacted with crypto, will those people, will they want the ability to recover a seed phrase?
Well, I'd have to say most likely. I mean, you hear these horror stories, right? And I always, when I first started getting into crypto, I would hear these terror stories about people having forgotten their keys, forgotten their phrase, and they were locked out of about, $2 million in their account. That's terrible. I mean, if that's you, I have nothing but the utmost, I feel so terrible for you. I think, and there's something to be said for, I think, the Gen Z kind of younger culture, people just, and I might get some blowback for this, but people just don't have kind of the memory, I feel like, and the capacity to, remember like we used to. I mean, I have a pretty good memory, which I'm proud of. But, I do think there's kind of shorter attention spans now. I mean, why do you think we watch shorts instead of full on movies? It's because our, attention spans are that much shorter. And I feel like, remembering a 12 to 24 seed phrase might be difficult for some people. I mean, I have a 12 seed phrase, and I've written it down. I have it written down somewhere, and I don't think I'm likely to lose it. But then you never know. You never know what people are kind of capable of, and with those 6 billion people out there who have never interacted with crypto before, onboarding them, I think is a project, right? And I understand the need to want to have adoption be greater, but at what cost? And I was listening to a podcast today actually, and they were talking about this very thing, and they said one of the guys said they should have just, if they wanted to onboard some new users, they should have just done a 2.0 version of Ledger, for new users, we can set, this up. We can have, this recovery if we want. Why do we have to roll it out to everybody? And I know there's an option to not, but then at the end of the day, how safe is that? And how centralized are we getting? And I just have this picture in my head of a shredder, right? You can put a piece of paper in a shredder and it goes like this. And you've seen the movies. You can, if you're a detective, you can put it back together with tape. You can still, get access to that. So, in my mind, it's you shard these things out to different entities. But at the end of the day, if you're a sophisticated hacker and AI is only getting more sophisticated, where does that leave us? So it worries me a little bit, but you know what? We will see.
Yeah, there's probably a good product line. They could have spun out a second line, Ledger for Noobs, probably a little bit more user-friendly name than that. And just said, hey, this is only on these, market it. Hey, this is the Ledger for Dummies. That probably would have been what they should have done. All right, Randy, what do you think Trezor is thinking and doing right now? Are they celebrating? Are they about to be number one? Is it all hands on deck?
Trezor should be celebrating. I think every wallet in crypto should be celebrating because this was probably like the worst move that you could have made as a company in crypto. Because I think fundamentally why we're here, we left the traditional financial system, we left the banks because we didn't want to trust anyone to hold our value, to store our wealth. We didn't make, some of us maybe made the same mistake with exchanges, but we learned from that. You exchange your fiat for crypto, you put that crypto in your wallet, and you're able to spend freely. Now, having those recovery phrases is so important. And I think if you're in crypto, if you have seen the tyranny of the traditional financial system, then you know that you can't trust anybody. So to even have the idea of you giving your recovery phrases to somebody else, it's just like contradictory of why you're in the space. Like Ledger, you're here to be a cold storage wallet. You're here to empower people to be their own bank, but you're encouraging people to do the exact opposite. You can't trust anybody. You have to trust yourself. I think other companies should be pushing out marketing right now, saying that we won't do that to you. We're in charge of leading the space against, the traditional financial system, against centralization. We want to push decentralization. And I guess that maybe some people could say it's good for newbies, but why would you onboard people into crypto and give them the wrong idea of what it means to be in crypto? You're onboarding them into decentralized finance, where you don't worry about anyone else having your wealth, having anything to do with your wealth. Take the responsibility. Don't be scared. And there is something with government interference as well. And with people like Trezor and other companies, you don't have to worry about them having to give your seed phrases out because they simply don't have it. So make sure you are sticking to the fundamentals in this space. Don't listen to anybody else. Keep your keys to yourself. Make multiple copies. Put it on metal if you want. But this is absolutely horrible. And I'm very mad that it's around because it's giving newbies the wrong message.
Yeah, definitely the wrong message here. I do want to share this message from Flat Smack, though, real quick. Trezor, open source at least. Factor, go ahead.
Yeah, but Trezor was caught giving information to some sort of entity. I can't remember what it was not too long ago. Did we forget about that? I can't remember the exact details of it.
The plot just keeps thickening here.
It's important that there shouldn't be data leaks, but the whole thing about the recovery phrases being given out, that's just something that I'm not a fan of at all. I think you're misleading people. You have to direct people to, okay, you're in crypto, now be your own bank. This is how it works. You download your wallet, you get your recovery phrases, and you deal with the responsibility that comes with that. I think we have to stop giving people the narrative of, okay, I'm going to hold your hand, because that's what the traditional financial system has been for hundreds of years. Put your money in the bank. Trust us. We will help you. And now people are seeing that that's not happening. Don't trust anyone with your recovery phrases, guys. It's just silly. You
got to write it. You got to write it on a piece of paper and then lose it, like normal folks. All right, Firoz, final question here. Do you have any concern about these corporations reconstructing your seed phrase from these shards? Is that a real fear, or is this maybe just overblown nothing burger?
I'm afraid to speak in case Randi beats me up, to be honest. But let me let me give my view on this, because I see it slightly differently, right? Of course, there's always risk if you're splitting the seed phrase across 3 companies. There's always risk, right? One might not have a tighter, operational security than the others. So there's a potential that the seed phrase gets caught. Right? Fine. Now, I would say the risk for all 3 to be exposed, from 3 separate organizations. I mean, I would say that we're pretty much on the fringe cases, not out of the realms of possibility, but we are on the fringe cases of all 3 being hacked.
Just a pushback, just for 1 second, just a pushback. Yeah. What about a subpoena going to all 3 entities simultaneously?
Well, I was about to get onto that, DC. No, and actually, so now this is the other end of the argument, because within Europe, we've obviously seen the bill that's been recently passed, which is around that they want to be able to track every crypto transaction. Okay, so now that we have a compliance issue within Europe, so potentially, if there is a transaction that governments or authorities are interested in, for example, and they happen to see that this wallet address does originate from Ledger, then of course there is a possibility here that they could then say, if you're going to operate within Europe, you need to comply with these rules and regulations, and therefore you have to give us these seed phrases in order for us to freeze the amount or remove it temporarily until whoever owns it comes forward. So yes, there is always that counter argument as well. And that's something that I literally read today, which was, crypto transactions having to be recorded. And I think that's a very important point to bear in mind, because that does then open up this whole entire thing to, you not being secure anymore. And at that point, I agree with Randy as well, that from that perspective, you're not protected. You're not your own bank anymore, which is clearly, what the whole self-sovereignty piece was about. But at the same time, I'll be honest, there are many people coming into crypto that might not understand the actual risk of owning your own seed phrase. And like Eleanor mentioned earlier, you lose that seed phrase, you really are up, bleep creek at the end of the day, because you're just going to be sitting there looking at those numbers go up and up year in, year out, knowing that there's no way that you'd be able to extract those assets.
Yeah, no, you would also convince yourself.
Here,
I wouldn't have held on to this long. I wouldn't have sold. Really good point there. I do want to share.
I mean, you have to KYC for this service too. So you're KYCing, telling them who you are, and paying them for them to take all of your crypto if you do get exploited. I just don't see the point. Like I don't. You're misleading people if you're onboarding people and pushing them in that direction.
Go ahead, Factor.
I'm not gonna address that. I think we all have different and same opinions, but I think in Europe it's something called the travel. It's when you did crypto transactions, it's something along the lines of the travel rule. It's not for peer-to-peer or for between wallets that you.
Well, you have an accent, so I'm gonna trust your viewpoint on Europe at least.
No, I'm not sure.
Well, I do want to share a question with the chat real quick. What would you rather do? Would you rather shard 3 times 3 companies, or would you rather scan your iris? I think I think it's a touchy subject. I think it could go either way there, but either. All right. Well, we do have a tie, so it looks like we're going to share the screen here. That's all we have time for. Eleanor and Factor both coming in with 21. So Eleanor, feel free. We're starting with Factor. Factor, feel free. Gives about 10, 15 seconds, and then Eleanor, take it away after that.
Eleanor, I feel bad starting before you, so please go ahead.
Okay. Am I freezing or am I good?
No, you're good.
Am I good? Okay. So breaking news that happened literally about 30 seconds ago. That's why I went off camera to tweet it. Judge Torres has she has denied the SEC's motion to keep the Hinman documents sealed. So the Hinman documents, if you don't remember, are the set of documents that went into basically the making of the 2018 June speech made by Hinman, who said that Bitcoin and Ethereum are not securities because they're sufficiently decentralized. So with any luck, we'll be able to see those documents soon. So that's breaking news.
Huge news. Thank you for that. Crypto Factor, feel free.
All right, so I'm going to say, first of all, thank you very much. We have a lot of fun here every week, and we all get educated, even on the panel. And I want to say, check out everybody's profile, check them out, join them, support them. And I'm going to give you just one parting thing. Altcoins will make you rich, Bitcoin will keep you wealthy.
All right, good stuff there. And we want to help out our supporters. If you're a sub to this or a super subscriber, we're going to end with Just Gems. Oh, by the way, give a bald man a comb, and he will never part with it. I felt like it was fitting for this episode. That's all we got. Make sure you hit that like button. Until next time, easy out.